Hello traders, Day Trader Matt here of businesswithtrading.com doing a trading strategy recap for the 10th of April, Friday. And today was another great day in the markets. Today in our trading room we ended up with one trade and 5 3/4 points. This is always good. And one trade we definitely utilized some patience. And let's look at what we actually did. We were long shortly off the open. We set through all of this chop. Market finally started to move up, and we held. We waited, and we took profit up in this region here. And we just, kept watching price. It ended up moving even higher, which was interesting to see. And then we ended up closing right over here, just because price was so choppy. It wasn't really doing anything. Now, if you look after we closed the room, it did come up a little bit, then it came back down to, close out 12 o'clock. Then it went sideways and started to move up again. So it's one of those times, you could say, if I would have gotten long, I could have made some money, but then it came back down a little bit, like to around this region. So, it is what it is. I'm not the type of person to force trades. I talk about patience a lot, talk about consistency. Trading is all about being able to, work the hours that you have set out for yourself and then go home. That's what it's all about. It's not about 24-hour a day trading. When I first started trading over, what was it? I think 2003, I placed my first futures trade. I traded equities before that. And I traded all day long. 8:30 in the morning, 10:30 at night, midnight, can't sleep 2 o'clock in the morning. Traded in the afternoon. I traded all the time. I'm sure my broker loved me. He was like, oh yeah, that's great. All this commission. But I wasn't getting anywhere in my trading. It took me a little bit of time to work myself out of that. And then to actually come to the realization that, what the hell am I doing? I'm trading all the time. Well, when I finally made set hours in my trading, my trading got better. I hear some people saying, well, my success rate needs to be lower because if my success rate's lower, I'm going to play my winners out longer, or some crazy stuff like that. That doesn't matter. What matters is you have set hours for your trading. At least that's what I see. That's what I teach people. Have set hours for your trading, like our trading room from 9:30 to 12, and we're done. I don't day trade the ES after hours. Trading the ES in the afternoon NYSE session, maybe 1-2% out of the entire year is what I trade. And that's minimal. That's very minimal because I'm trading other things. We're trading options. We're trading different commodities or different futures, the ones that are open. And that's the way I look at it. And in doing that, you have to have a lot of patience because you have to be able to tell yourself, okay, I'm trading these set hours, and then I'm done until tomorrow. A lot of people can't do that. And trading is definitely addictive. Trading, if you let it, it will take over your life. Like anything. Like gambling on horses or, going to Vegas and, gambling on blackjack, something like that. Or maybe a board game that you like and you just have to play it every day or something like that. Just a lot of things will take over our lives if we allow them to. And allowing trading to take over your life does not mean you're a trader. It just means you're a gambler. Those two things are very, very different. It's like professional poker player versus a gambler. Those are very different. Very, very different. And I take a lot of offense to the term of a professional gambler. So it's very oxymoronic. It's like parking in a driveway and driving in a parkway. It's like, okay, that really just funny. Doesn't really make any sense. But that's the terminology that we use as a society. So anyway, I wanted to talk about that a little bit. Hopefully it made some sense to you. I feel like I jumped around a little bit. And let's get into our option trades that we did. One of which is Pfizer. Pfizer, we actually held for a little over a month. We got long over here, and we held it. Price jumped, came down, blah blah blah, jumped up again, and we got out right here, which is a pretty nice move. We made 58.3% on this trade, which comes out to 63 cents. And in options terminology, 63 cents means $63 per contract. And usually you're trading a few contracts, 10, 20, 30, something like that, maybe 100. I don't know what your account is. But $63 per contract is definitely not a bad thing. And 58%, you might say 50% in a month, maybe not that good. I'll take it. We trade options as a portfolio, so we're trading many different options as a group to make up our portfolio. And sometimes you just need to start selling them. And Pfizer ended up in that category. It could go up a little bit more from here, but I would rather get out and then look for another entry rather than just continuing to hold it. So that's one of the trades that we exited today. The other trade that we exited today was Rite Aid. And Rite Aid, annoys me a little bit because I could have taken it off up here. And I think that's a sign of any good trader. If you get annoyed with your trading, it means you're a trader. I think that's anybody who's in the market, you're going to have a trade and you're going to be like, shit, I should have got out a couple days ago, but I didn't. What do I do? Well, your new trader is going to say, well, you know what? I can hold this thing. If I have to hold it for another few months, it goes in my favor, it'll be okay. The trader who, knows that they can do analysis on it and figure out what is it likely to do. I think it can probably come back up here, perhaps, but it's most likely going to come lower. That's my analysis. That's my thesis. So, do I want to hold it till it comes up here? Because it might not. It might just sell off. But it could come up here. That's what I'm thinking. I really don't think it comes back up here, but it could. But that seems like a crapshoot to me. Okay, let me hold it because it might come up here. It might not, but it might. And if it does come back up here, I could sell it for the same price it was over here. Theoretically, if it does it quickly. If it takes a few months, obviously not. And we're in an option trade, which obviously has time value. I've talked about in the past, I don't really look at the Greeks when I enter options. And that might be counterintuitive to a lot of the information out there. Actually, it is pretty counterintuitive to a lot of the information out there. But I don't really see that as important. Looking at this, what's your delta, your theta, your gamma, blah, blah, whatever else other terms are out there. But it's important to know what those are, because there are certain times when you look at them. There was a trade that I made a few days ago that I looked at. I was keeping an eye on the Greeks today and yesterday. most of the time, I don't really care. And did I look at them when I entered? No, because that's not what I do. That's not my style. But anyway, that's a topic for another day. So let's talk about what we actually did on this one. So this one we got long right this day here. About right there, we got long. I'm sorry, it would have been right here. Okay, so on this green candle right here, we got long. Obviously, on this move, it was a good trade. After we got long, price did come down a little bit, and that's usually what happens. Get long in a trade, chops around a little bit, maybe take a little heat, and then it starts going in our favor. I'm not exactly sure what that was. It was very minimal, whatever it was, 10, 15 cents maybe. I don't remember, but it was very minimal, whatever it was. We got in 65 cents on. We took an August call just because I was thinking it was going to come up a little bit more. I wanted to buy some time. I wasn't too sure how much time it was going to take, but I figured it was going to take some. I didn't think it was going to do all of this inside of 30 days because we got long here on the 12th. This is March 12th, and this is the 8th. So this is inside of 30 days. So, that's a good example of, maybe buying a little too much time, but it is what it is. We still made 61% on the trade. So anyway, we got out down here. So let's talk about the numbers. We made 61.5% on the trade. So very nice move, which equates to 40 cents. So 61.5% in a little less than a month, because we sold it yesterday on the 10th, and we sold it into this pop here. I put in the order, and this happened in the afternoon. We put in the order. I was out shopping with family, and I got the email. We were filled at this price. And I was like, alright, great. I wanted to get out, but I always put in limit orders, no matter what I trade. If it's an option, a future, the ES, I'm a limit person. I like to set my price on entry and exit. I know some people like to do market orders. I just want to get out, I just want to get in. I would say 100% of my entry orders are limit, and 98 to 99.5% of my exit orders are limit. The only time I ever exit market as my own personal trading is when I see something and I'm just like, I'm going to get out of this. And that's my personal trading. Whenever I'm trading with the services, 100% limit, 100% limit on entries and exits. But it's important to talk about, what do I do in my personal trading versus what happens here? And, what are those markets? They're mostly currencies. Like the euro and the Aussie dollar last week, I traded personally. Because I felt that the risk was a little much for the future service. If the risk isn't a certain amount, then I don't usually trade it. I like to keep risk about the same on every single market that I trade. So that means that I can't risk over a set amount. So if the risk is a little too much, no matter what our profit is, if the risk is a little too much, I'm not going to put out that trade. I just, I don't think it's helps anybody. Because you're risking so much. If you were to get stopped out, it would be much more difficult to make that up. And that it's all about risk profile. How much do you want to make? How much do you want to risk? And those are my thoughts on that. So if you have any thoughts on risk, feel free to share them. I'd love to hear your thoughts. Your strategy, what you like to do, because everybody's different. Everybody's going to view risk differently, and because everybody's coming from a different perspective on risk, everybody has different thoughts on it, which is awesome. And that's what makes the world an awesome place. Because everybody has a different perspective, everybody comes from a different place in life. So a lot of times those perspectives are just very, very interesting to hear, because you're like, oh wow, I never thought of that. But that's pretty cool. Thanks for sharing that. And that's why I always ask people, share your thoughts if you want to. I'd love to hear them. If you don't want to put them in a public forum, like the comment section, email me, support@abusinesswithtrading.com. Because that's the whole reason I started A Business with Trading anyway. Firstly, the name itself, A Business with Trading, because a lot of the traders I was meeting online were like hobby traders. So put a business around it. But I really started it to meet other traders, to learn new perspectives, because I don't know everything. I know my core competency. And the older that we get, the more that we get stuck in our core competency. So we have to actually make an effort to see things from different perspectives, to learn, to read, and I'm an avid reader. So anyway, if you have any thoughts on risk, anything on what I talked about, I'd love to hear it. You can leave comments below or email me, support@abusinesswithtrading.com. Thanks for watching. Have a great, great rest of your day. Have an awesome, awesome weekend, and I'll see you back here next week. Thank you.